All right, welcome back, everyone. We're diving into some pretty choppy waters today, huh? The UK market.
Yeah.
Lots of you have been asking for, well, more info on what's going on over there, kind of what's driving all this economic turmoil.
Mm-hmm.
And, maybe, just maybe, are there any opportunities hiding, amidst all the chaos?
Right.
So we've got a couple of sources to guide us today. Really interesting piece from the Sunday Times, real boots on the ground kind of stuff.
Okay.
And then this synthesized FAQ document helps break down some of the complexity.
Interesting.
Yeah, what I found really fascinating is, it's not just doom and gloom.
Yeah, that's not all bad.
There's anxiety for sure, but the markets are reacting to all these shifts. I mean, global scale stuff.
Right.
And that creates this really interesting landscape.
Yeah. Yeah, especially when you start thinking about mergers and acquisitions.
Okay, see, that's what I love about these deep dives. You uncover these angles you wouldn't expect. Okay, so the Sunday Times, they paint this, pretty stark picture, right? Bankers, literally having meltdowns. Deals are falling apart.
Wow.
What is going on? What spooked the market so badly?
Well, it all comes down to these things called gilts.
Guilt?
Yeah, they're UK government bonds, and they're like this benchmark for borrowing costs across the entire UK, and their yields are skyrocketing right now.
Okay, so for those of us who maybe need a little refresher, break it down.
Okay, so imagine gilts are the foundation, and as their yields go up, the interest rates on everything, like mortgages, business loans, everything gets pushed higher too.
Ah, okay. So it's not just the government's got to pay more to borrow money. This affects everyone. Businesses, people trying to get a mortgage.
Right.
That's got to put a damper on economic growth, right?
But it can, yeah. It's not quite that straightforward though.
Okay.
But, those bankers, they're the ones with their heads in their hands, as the article put it. Yeah.
Yeah. They're a pretty good sign that, when gilt yields rise, things can get really messy really fast. I mean, remember those FTSE 250 bids that fell apart recently?
Uh-huh.
Those rising borrowing costs, the final nail in the coffin.
Oh, wow. Okay. So we've got this, benchmark effect with the gilts.
Right.
But why are the yields going up in the first place? What's causing that?
Well, there's a lot of factors at play, but one of the big ones is the whole global picture, the Trump effect, some are calling it.
Okay.
The new U.S. president, his policies, especially with tariffs,
Yeah.
they're making waves even across the pond. See, the expectation is that these tariffs are going to lead to inflation, and that puts a lot of pressure on central banks like the U.S. Fed.
Right, because their usual move to combat inflation is to raise interest rates.
Exactly.
But wouldn't that, make U.S. investments more attractive? And pull money out of other markets like the UK.
That's exactly what's happening.
Really? Yeah. It's a connected world, right? And money goes where it can get the best return. So if the U.S. is looking more profitable, global investors, they might pull out of UK gilts, lower demand. And guess what? That pushes those yields even higher. So it's a bit of a vicious cycle.
Oh, wow. And the UK government's stuck right in the middle of it. I mean, higher borrowing costs when they need to fund public services and manage their debt. Our FAQ document even mentioned Chancellor Reeves. She's getting a lot of flack for that trip she took to China.
Oh, right.
During all this market chaos. Some people are wondering if she shouldn't be, trying to calm things down back home instead.
Yeah, it really highlights the tough choices they have to make, and the scrutiny they're under with all this going on.
Mm-hmm. It kind of reminds me of that budget crisis back in 2022.
Oh, right.
When that controversial budget sent the markets into a tailspin.
Yeah. The Bank of England had to step in with emergency measures, right, just to stabilize things.
Yeah, it was like everyone was holding their breath for a minute there.
It was a major intervention for sure. Really shows how interconnected everything is, how quickly things can change.
Yeah.
And it's interesting, there are some parallels to our current situation.
Really?
Yeah, in both cases, gilts are at the heart of the anxiety, and the Bank of England plays a pretty crucial role.
Okay, so he's got the Bank of England. They're on high alert. There are new regulations, but gilt yields are still climbing. Is there any good news here? Is there another way to look at this whole rising yield thing?
Well, some analysts, they're saying that these rising yields, they could be a correction, a bumpy but necessary kind of reset back to a more normal, historically normal interest rate, We've had artificially low rates for so long.
So this could just be the market, like, normalizing itself, even if it's a little rough.
It's definitely something to consider, but it's still early. We're in uncharted territory in a lot of ways. But before we get too bogged down in all the doom and gloom, let's talk about that silver lining you mentioned, mergers and acquisitions.
Right, M&A.
M&A.
This is where things get really interesting. Right?
Yeah.
We're talking about, like, opportunities coming out of this turmoil.
Yeah.
And a weaker pound, which we're seeing right now.
Mm-hmm.
That makes UK companies a lot more attractive to foreign buyers. Especially those with U.S. dollars to spend.
Exactly. It's just simple currency exchange. Your dollars go further when the pound is weaker, so you can buy more assets for the same amount of money.
Okay. So it's like a sale, but on, like, businesses.
Yeah.
Much higher stakes, though. But the Sunday Times article, they had this quote from a U.S. private equity advisor.
Okay.
And he called it a raid on UK plot.
Wow.
Pretty strong words. Is that actually happening? Are we seeing that?
It's not just speculation. There are real examples.
What?
Alliance Pharma, the healthcare company, they just agreed to a takeover. De La Rue, the banknote printer, got a big offer.
Okay, so M&A is, like, buzzing even with all this economic uncertainty. What's driving that besides the weak pound?
Well, one factor is that the corporate debt markets are still pretty healthy. Companies can still get financing, and that can fuel M&A activity. And remember, not all companies are struggling.
Yeah, right.
Some are doing great. And those are the ones that become targets, attractive targets.
Okay. So it's like this weird dynamic. Some companies crumble under the pressure. Others become, like, prime targets.
Exactly.
For those who can take advantage.
Yeah, and that's a key takeaway for anyone watching the UK market. It's not just one big blog, right? It's all these different companies, different strengths, different weaknesses.
All right.
And that creates both risk and opportunities.
Yeah, that's a great point. And you know what? This is a perfect place to pause. We'll pick up this conversation in part 2. We'll dive deeper into M&A, look at some specific sectors that might be really enticing to investors. So make sure you tune in for that.
Wow, it's amazing, isn't it, how we've connected all these, like, seemingly random things. We've got a new U.S. president, then the UK bond market going haywire, and now all this M&A activity heating up. It really shows how interconnected everything is, doesn't it?
Yeah. It's like we're putting together this, like, giant puzzle.
Yeah.
Revealing these hidden connections that drive the global economy.
And as we dig deeper into this puzzle, we got to remember, the market isn't just the single thing. It's made up of all these individual companies, right?
Right.
Each one with its own story, its own strengths and vulnerabilities, and that's where the real potential for both risk and opportunity comes in.
Yeah, absolutely. I mean, while some businesses are, like, really feeling the squeeze from those rising borrowing costs.
Yeah.
Others, they might be in a perfect position to, like, capitalize on the situation.
Right. It's all about strategy, timing, and maybe a little bit of luck.
Yeah, yeah.
And maybe a keen eye for those hidden gems. Remember that weak pound we talked about?
Yeah.
That creates a pretty enticing scenario for foreign buyers, especially those with U.S. dollars.
Oh, okay. So, like, picture this. You're a U.S. investor looking to expand your portfolio. Suddenly, UK companies are looking, they're looking pretty affordable.
Yeah, a lot more affordable.
It's almost like a sale on businesses.
Yeah, kind of, but with much higher stakes.
Yeah, definitely. But it's not just about snapping up bargains, right? I mean, you got to think strategically, long-term growth prospects, and how to integrate, like, a whole new company into your existing operation.
Exactly. A successful M&A, it's not just about, getting more stuff. It's about creating value. Yeah. And that takes careful planning, due diligence, understanding the target company's position in the market, a well-defined integration plan.
You're making me want to, like, dig out my old business school textbooks.
Right.
But seriously, you've hit on something really important here. This isn't just a game for, like, Wall Street hotshots.
No.
Understanding these market dynamics, it's valuable for everyone, right?
Yeah.
I mean, whether you're an entrepreneur, an investor, or just someone trying to understand how the economy works.
Absolutely. Yeah. And that's one of the things I find so fascinating about it, It touches every part of our lives, jobs, investments, even our sense of, like, financial security.
Yeah, it's true. We're all connected to it, even if we don't always see it. Okay, but let's get out of the abstract for a second.
Huh.
I'm curious about some, like, concrete examples. What UK companies might be attractive targets in this climate?
Well, I can't make any specific recommendations.
Sure.
That's outside our scope. But we can talk about some sectors that might be interesting to U.S. investors. The U.K. has a strong reputation in tech, healthcare, and financial services.
Yeah.
Those are sectors that they often attract a lot of M&A interest, especially when the exchange rates are favorable for buyers.
Right.
Like right now.
So, okay, picture this. You've got this UK tech startup, cutting-edge stuff, but they're struggling to get funding in this crazy market.
Right.
And suddenly, boom, this U.S. tech giant swoops in with an offer they can't refuse.
What?
Win-win, right.
Could be. The startup gets resources, a bigger market. The U.S. company gets valuable IP, talent.
Right. It's classic M&A.
Exactly. Driving growth, innovation.
It's all about finding those synergies, right?
Yeah.
Two companies coming together to make something even better.
Yeah.
But this brings up another question. We talked about how the Trump effect is, impacting the UK, but could his policies also create opportunities for M&A?
That's a great question, and it really highlights how one event can have so many different consequences.
Yeah.
Take President Trump's focus on deregulation.
Okay.
If certain sectors in the UK become less regulated,
Yeah.
that could open the door for U.S. companies, to enter the market or expand their existing operations.
Like it's like opening a door that was previously locked, right?
Yeah.
Suddenly there's a whole new path for investment and growth.
And that path can lead to M&A activity.
Yeah.
A U.S. company might see deregulation as a chance to acquire a U.K. company that's already established in that sector,
Right, so they can just hit the ground running.
Exactly.
So it's like this added layer of complexity.
Mm.
Even policies that create economic uncertainty, they can also create these unique opportunities for those paying attention.
Precisely. It all comes down to understanding the nuances of these global events and how they play out in specific sectors and industries. What might be a challenge for one company
Yeah.
could be a golden opportunity for another.
It's all about perspective, right?
Yeah.
Seeing the bigger picture. But speaking of challenges, I got to ask about the risks involved in M&A, especially in a market like this. I mean, it seems pretty risky to jump headfirst into an acquisition right now.
Yeah, you're right to bring that up. M&A always comes with risks, especially now. Integration problems, culture clashes, unexpected economic headwinds.
Right.
Those can all derail even the best deals.
So it's high stakes, right?
Yeah.
Big rewards, but also big potential pitfalls.
Mm-hmm.
And to navigate it, you need to really know the market, have a clear vision, and a healthy dose of caution.
For sure. And maybe a willingness to embrace uncertainty. Because as we've seen, even in times of turmoil, opportunities can pop up in the most unexpected places. It's about recognizing them and having the courage to seize them.
That's a great point. Well said.
Yeah.
But you know what? This is just the tip of the iceberg. We've got a whole world of financial intrigue to explore still. So stick around for part 3, where we'll wrap things up and leave you with some thought-provoking questions to ponder. All right, welcome back. Final part of our deep dive into this UK market roller coaster.
Yeah. It's been a wild ride. We've covered those crazy gilt yields, the whole Trump effect thing, and how M&A is heating up in the middle of all the uncertainty. It's a lot.
It is. It really highlights how interconnected everything is, doesn't it?
Yeah.
What happens over in the U.S., it has such a huge impact on the UK.
It does. And I think that butterfly effect analogy you used, really, really captures that.
Okay, so as we wrap things up here, what did you say are the biggest takeaways from our deep dive?
I think first and foremost, we've got to remember that these concepts, like gilt yields, they sound really abstract, but they have a huge impact on everyone. Businesses, consumers, the economy as a whole. It's not just, numbers on a spreadsheet. It's people's lives, companies trying to grow, the entire financial health of a country.
Yeah, it's easy to forget that sometimes, right?
It is.
That it's not just this theoretical stuff economists talk about. It really does affect all of us.
Yeah, and the second thing I'd emphasize is, we can't look at the UK market in isolation. It's part of a much bigger global system. What happens in the US with interest rates, trade deals, all of it, it creates both challenges and opportunities for UK companies.
It's a good reminder to stay informed about what's happening around the world, not just in our own backyard.
Absolutely. And finally, I think the biggest takeaway is that even in these times of like crazy market turmoil.
Yeah.
There's potential for both risk and reward.
Okay.
Some companies, they're going to struggle to stay afloat, but others, they might find themselves in a really great position to grow, maybe through acquisitions, partnerships, or just, filling a gap in the market that suddenly appeared.
So it's like one company's crisis is another company's opportunity.
Kind of, yeah.
Okay, before we let everyone go, I want to leave our listeners with a little something to think about. We've talked about how that weak pound makes UK companies really tempting for foreign buyers, especially Americans. So imagine you're a US investor, you've got your eye on the UK. What sectors or specific companies would you be, checking out right now?
That's a great question. And it's one that deserves, some serious thought. Don't just look at the headlines. Think about the long-term trends, which companies are going to not only survive this, but come out even stronger. That's it. You got to find those hidden gems. And you know what? That's what the deep dive is all about. Helping you guys uncover those insights, make those connections, and understand this crazy world we live in.
It is.
So until next time, keep exploring, keep asking those tough questions, and keep diving deep.